Are you a high-income wage earner looking to lower your tax bill and maximize your tax savings? In this video, I am going to go through the top 5 strategies that high-income earners should be utilizing to minimize their tax bill and put more money in your pocket, because tax savings is what it's all about. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. Tax brackets are very important for you to understand. On the federal side, we have a multiple amount of tax brackets going from 10% upwards of 37%. It's so important for you to understand that as you make income, you shift into a different tax bracket. I actually jotted down my brackets here because I really wanted to go over them with you and give you a concrete example. If you are a wage earner, and let's say you are married filing separately and you make $100,000 a year, your top tax bracket is going to be 22%, but all of your income is not going to be taxed at 22%. Your first $11,600 is going to be taxed at 10%. The next amount of income up to $47,000 will be taxed at 12%. Anything above the $47,000, always up to the $100,000, will be taxed at the 22%. It's so important to understand that our tax brackets layer. Therefore, we want to make sure that you utilize the strategy of knowing when you're going over into a new tax bracket. Maximize your retirement contributions. When you are a high net worth earner, it's so important to take money off the table. IRS has set up Code Section 401, which allows you to contribute to your 401k. When you're contributing to a 401k or any type of retirement account that is not a Roth, a tax-deferred account, the theory is put money away when you're in your high earning years so that when you draw that money out, you will be in a lower tax bracket. Yes, that money will be taxed when you draw it out. However, it should not be taxed at the highest tax bracket because you're probably gonna be in lower earning years. Plus, you can control when you take that money out. So it's so important to set money aside in your retirement accounts to lower your overall tax bill. And most times, your employer is gonna match it. So don't leave money on the table and give it to Uncle Sam. Please don't. Utilizing tax-efficient investments as a high W-2 wage earner is so important because this allows you to set money aside tax-free to pay for things that you need, such as an HSA. A health savings account is going to allow you to set money aside so that you can then go get that money to pay for things that you normally wouldn't be able to deduct. Most high W-2 wage earners are not able to deduct their medical expenses because they have to be 7.5% of your adjusted gross income. And typically, if you're having medical expenses that high, you're probably not even having a tax problem because you probably can't work. So utilizing your HSA is going to allow you to be able to get the benefits of these various tax deductions. Charitable contributions is another way for high wage earners, high net worth individuals to reduce your tax bill. Now, I know some of you might be thinking, Karla, I don't want to give my money away to a charity. Come on, you're probably doing it anyway. Are you doing stuff for your kids' baseball, your girls' soccer team, whatever the case may be? Most of those organizations are probably nonprofit organizations. And there's going to be some amount of that registration that's a donation to the organization. So make sure you're taking that as a tax deduction. But have you thought about opening your own nonprofit? Have you thought about putting money in your nonprofit where you can later on in life do something philanthropic? Maybe you want to set up a family legacy. Something to consider when you don't want to leave all of your money on the table for Uncle Sam. Real estate investments are a great way for high W-2 wage earners to reduce your tax bill, especially if you are on a tax return that is married filing jointly. One spouse is working and the other spouse is not. That particular spouse can manage the real estate and qualify to take a big write-off in real estate deductions. There's so many ways that you can maximize your real estate deductions, from being active in Airbnb, from being a real estate investor, from renting out some of your home. That owning real estate as an investment is mission critical. In addition to owning it just for rental, being able to write off your mortgage interest, your property taxes, and other things that go along with that will go a long way to helping you reduce your tax bill. A lot of high W-2 wage earners own stock. If you have stock in the stock market and you are starting to get down to the end of the year and you see that your account may be upside down or some of your investments have lost money, go ahead and allow yourself to take that loss on paper. That's right, sell off that stock at a loss and do what we call tax loss harvesting. This is where you're going to be able to allow for your losses to hit paper, generate a loss that flows over to your W-2 income. And I know you may be thinking, well, Karla, I don't want to liquidate my account. That's why it's so important to understand your tax position when you're thinking about liquidating your account, and realize you can always buy that stock back, but you have to wait a minimum of 30 days to buy that stock back so you don't miss out on getting your tax deductions. This is a strategy that a lot of high net worth individuals, high W-2 individuals utilize to generate losses that they can carry forward year after year. So make sure you take advantage of tax loss harvesting. High W-2 wage earners can also take advantage of income splitting and income shifting. Income splitting is where you allow some of your family members to receive some of your income, and income shifting is where you're going to put your income into another entity. Allow me to explain. How about you set up a side hustle or a side gig? How about you allow that business to take some of your write-offs? And how about you allow that business to be paid for some of the things that you actually are out there doing? When you are able to put your family on payroll, when you are able to take advantage of your car write-offs because you are starting a business, those losses that you generate in your startup phase is going to allow you to offset your W-2 wages. There are so many things you can do as a high network W-2 earner that you are not taking advantage of, because we only think that we can take advantage of the tax code if we own Google, if we own Apple, if we own NVIDIA. Not the case. The tax code is for everybody. You just need to understand how you can take advantage of it by following the law as it is written to be able to reduce your overall tax bill, keep more money in your pocket, and stop leaving Uncle Sam a tip. Estate planning and trust are another way that you can lower your overall tax bill. Realize everything that you are accumulating right now eventually will pass down to your heirs. You want to make sure it passes down to your heirs with the proper intention for them to be able to capitalize on what you've done and parlay it to another level. If you want that to happen for your family, where you're able to pass down generational wealth, you have to make certain that you have the proper estate planning done and that you set up the proper trust according to your needs and what your foreseeable future looks like. Making sure that you take the time to do the right thing today will save your heirs taxes down the road. And now that you know better, you absolutely have to do better. You gotta do tax planning before the end of the year, because once December 31st hits, it is too late. Once the turkey gets in the oven, the tax professionals are starting to get full. It's so important to do your tax planning right now, right today, so you can plan to reduce your tax bill legally, so you can plan not to leave Uncle Sam a tip, and so you can plan to reduce your tax bill and keep your money in your pocket. Now that you know better, I need you to go out and do better. I want you to share this video, like, comment, and subscribe, because you can't afford to miss out on any more wealth building information. Now, go get after it.